Fair a few months back, U.S. finance markets seemed led for a tertiary year in a row of considerable increases. But shares include tumbled with October, receding to reduce levels rather than at the begin of the year. How decrease extended on Friday, as poor economical information in Europe and China sparked a deceased afternoon sell-off, send all three main U.S. stake indexes reduce. The Nasdaq omitted nearly 2.3%, the Dow bring down 2% and the S&P 500 sank 1.9%. For such nested in U.S. stocks, the dual digit reached in 7 of the recent 10-year may yet sense cute nice. But as side road discussion turns to fair, while a economic downturn might start, lot investors are fastening for a course patching, which's over the change in mood. At their peaks in October, the Dow and S&P 500 were up on 8% with the begin of 2018. The Nasdaq had enlarged 15%. It outpaced some economical measures by a big profit and was managed by the technology segment, that taken into account for approximately part of the reached on the S&P 500 up before medium August of the year. Now several of the largest winners, such as POM and Facebook, include stumbled, pulling downward the markets and manufacturing the weak in another place more than apparent. All three indexes are off 10% of their over peaks, a decrease frequently deliberate a adjustment. Before technology recovers, a more extensive marketplace rebound is hardly, told Terry Sandvin, head justice policymaker at U.S. Banking Riches Control. Looking to 2019, variability is potential to present the rule quite rather than the exclusion, he says. By lot measures, the extent of invest challenge is on the growth. U.S. center bankers include been increased concern rates with 2015, driving off of the extraordinarily low rates put in location for the finance meltdown as economical increase rebounds. Analysts are concerned on how lot more than costly loan might get, and if companies and households will be capable to knob the enlarged expenses. Fears include been tempered newly by signals of the U.S. Fed offering it may accept less rates rises in 2019 rather than previous anticipated. U.S. increase is anticipated to sluggish to 2.5% in 2019, downward of on 3% the year, on to the IMF and Fed back up. Investors favorite U.S. CEO Donald Trump cards 2017 tax intermittent. But his trading politics has them connected up in knots. In March, Mr. Trump card orderly tariff on overseas steel and aluminum, as on billions of dollar cost in yearly trading of China. Same's endangered more than, consisting on overseas cars. The tariff include already grown expenses for U.S. companies, and economists alert they endanger to sluggish increase, addition to economic downturn trouble. Markets aren't certainly on White's building policy, and an continuing inquiry of Mr. Trump cards poll campaigning bonds to Russia has just added to ambiguity radiating of Washington. If these investigations make several kind of smoke gun, how throws us in a constitution meltdown, how might show destabilizing, says Mark Wittner, elder political economist at Wells Fargo Stock. The IMF expects the world economics to extend 3.7% in 2019, but the increase has been more than irregular. Really, as lot as U.S. indexes are downward, finance markets in another place include omitted, though further. The world Dow is downward about almost 9% so far the year, and the MSCI Planet Code is downward on 8%. In Asia, Japan's Nikkei 225 code has fall on 6%, Post-Kong's Hover Sen code is on 13% reduce in 2018. The Shanghai Composite has omitted more than rather than 20%. The Stoxx Europe 600 is off nearly 11%. France's CAC 40 has omitted nearly 9%, London's FTSE 100 has rejected almost 11%. And Germany's DAX is downward more than rather than 15%. So turbulent seas potential lie front.